Listen up. The market just did something wild, and you need to know why. Smaller company stocks, the ones most investors completely ignored for months, just had a huge day. And tomorrow, the biggest banks on Wall Street are about to spill the beans on their earnings. But wait, there's a massive shockwave coming that could hit healthcare for millions of Americans. And stick around, because I'm going to tell you exactly how Elon Musk is trying to merge his AI empire with Tesla and what it means for your money. You won't believe it. All right, let's dive into this market madness. So what was the big news over the weekend? Political headlines, tariffs, all that noise. And the market? It basically just yawned, didn't even flinch. Why? Because the market's used to it. It's seen this show before. But here's the real story, the one no one's talking about enough. Smaller company stocks, the ones measured by the Russell 2000 index, just led the entire market higher today. They jumped about 0.5%. Now think about this. The Dow Jones rose about 0.2%, the Nasdaq climbed 0.25%, and the S&P 500 barely moved, just 0.14% up. But those smaller companies, they dominated. And this is huge because for months, these names were completely out of favor. Big money managers caught flat-footed. They missed the massive gains, and now they're scrambling to get in. They're throwing money at these overlooked companies just to catch up. We're talking real opportunities here. Sectors like consumer discretionary, energy, and yeah, those smaller stocks themselves, all ignored in the first half of the year. Now, they're set to explode. We've seen winners like Roblox jump 5%. Software giants like Autodesk, Shopify, and Twilio all popped over 4% today. Even some of those old school meme stocks are getting action again. Now, this isn't just some one-day wonder. A market expert I spoke to said, the market has climbed 25% off its lowest point in the last 3 months. And get this, the last time that happened, since 1950, the average return over the next year was another 23%. Yeah, 23% more. So while people say the market's gone up too fast, guess what? They're the ones who missed it. Sure, we might see some ups and downs later this year, but the potential still massive. I'll tell you exactly what that means for your investments in just a bit. Now, let's move to the economy's next big test. This week, the heavy hitters of Wall Street, I'm talking JP Morgan, Wells Fargo, Citigroup, they're all dropping their earnings reports. JP Morgan, the biggest bank out there, expected to announce a huge jump in loan profits, possibly over $91 billion. Why are banks crushing it right now? Because longer interest rates are rising. That means banks make more when you borrow. We'll also hear from JP Morgan CEO Jamie Dimon. This guy, he moves the market, so listen very closely to what he says about the economy. Financial stocks already had a solid run. One big index is up 4% since June. Expectations? High. But here's something you need to hear, and almost no one's talking about it. The government is about to slash huge parts of our social safety net. We're talking about historic cutbacks in healthcare and food assistance. For the last decade, these programs have grown, helping millions get Obamacare coverage and food aid through SNAP. But now, that's changing. Because of new policy moves and parts of that big tax bill, over the next 10 years, up to 16 million Americans could lose their health insurance and millions more will lose food aid. And some, they'll get hit by both. Now, this isn't some big, obvious cut. It's a series of smaller, sneaky changes. For Medicaid, there are tougher paperwork requirements. You have to prove more often that you're working, even if you already are. The government's own budget experts say just that rule alone will knock 8 million people off Medicaid by 2034. And that's not all. Some rural hospitals might shut down. Nursing homes could lose funding. Mental health services might vanish in some areas. On top of that, it's going to be harder to qualify for Obamacare subsidies. And Congress, they don't want to renew those benefits. So what do we get? 8 million off Medicaid, another 8 million off Obamacare. That's 16 million Americans losing coverage. This is real. It's not just numbers. This could affect you, your family, your community. Understand what's happening. All right, let's shift gears. You know the guy who's always making headlines? Elon Musk. He's doing something wild again. He wants Tesla shareholders to vote on whether the company should invest in his AI startup XAI. Yeah, really. And by the way, his other company, SpaceX, already dropped $2 billion into XAI. Now, this raises some serious questions about conflict of interest. But here's what some analysts believe. This is just the start. Tesla might even end up owning XAI outright, no matter what Musk says now. Because here's the vision. Tesla's self-driving tech, its Dojo supercomputers, even those Optimus robots, all of it plugged into Musk's AI brainchild, XAI. That's the big bet. That's why analysts like Dan Ives, a longtime Tesla bull, think Tesla plus XAI could be a top-tier AI juggernaut right next to NVIDIA. Now, here's a hot take. Even with all the drama and distractions, Tesla could actually end up as the last man standing in the EV world. Why? Because government EV incentives are going away. And other car makers like Rivian or even the big three, they're pulling back, shifting focus to hybrids instead. So while competitors struggle, Tesla might just power through. But it's not a done deal. There's another player leading the robot taxi race right now. Google's Waymo. They're actually executing, and most people are overlooking it. Musk is playing catch up, but Waymo holds the lead for now. Finally, what does all this mean for your investments? Some experts, especially the ones who missed the rally, now they're saying the market is overbought. But don't listen to the haters. Remember what I said earlier. When the market jumps 25% in 3 months, history shows we could see another 23% gain over the following year. Yes, we'll get volatility in the fall. That's normal. But the economy's foundation is strong. And those tax cuts, they're still fueling growth. So what's the bottom line? There's still tons of value out there. You just need to know where to look. Don't chase the stocks that are already on fire. Find the hidden gems before they explode. Don't follow the crowd. Skate to where the puck is going, not where it already is. That's all for today. If you found this helpful, smash that like button, hit subscribe so you don't miss the next one, and ring that bell icon to get notified the second we drop new content. Catch you next time.